Gautam, thanks for joining us here on Bloomberg Quint. First, very basic question on what your assessment is. It does look like over the last fortnight in particular, there has been notable improvement in conditions.
Yeah, I think there's clear improvement in the commercial paper issuances. So they've been close to 70,000 crores of paper that have been issued, almost 14,000 crores of paper being issued every day, of which almost 33% has been issued by the NBFCs. So I think clearly the rollovers have started happening. The market is being a bit more discriminative. Clearly the quality NBFCs are getting better rates, and the sort of the painful pockets, as people had expected, are sort of are still rolling over their CPs, but at slightly higher rates.
Gautam, can you give us some color on the quality of participation? Are you seeing housing finance companies in the market? Is volume strong enough?
Yeah, so I think housing finance companies have been there in the market. Most of it has been HDFC Limited, but we've also seen smaller housing finance companies like India Infoline, Piramal, as well as India Bulls actually, where people had expected some of the troubles. And they have raised money at the market, but obviously the yields vary. The ones which have more vintage and the ones which have backing are able to raise money at better rates. And the ones which are younger and the ones where people expect higher exposure to the real estate sector at the wholesale level the quantums have been much lower there.
Gautam, so in terms of the percentage of CP issuances raised by NBFCs, I think you said it's about 30% or a bit above that. Is that par for course even pre-crisis days? Wasn't a larger chunk of the issuance coming from NBFCs, say, pre-September?
Yeah, clearly. So I think we compare this NBFC crisis to the 2013 levels. And the 2013 levels crisis, the CP outstandings were almost 40% down. In this cycle, the CP outstandings have been almost 13% down, and after improvement have been 9% down. So I think we saw a downfall, but I think the issuances are coming back. And then even NBFCs, for that matter, I think the quantum was much higher, but this time it used to be about half. It's about 33% now. So the quantum is lower, but we are slowly starting to see the market clearing processes or the market clearing effects starting to take effect. And obviously it's a bit discriminative, where clearly people are going for the higher quality paper first. But I think the overall clearing is getting more and more inclusive as time passes.
2 points, Gautam. One is rates cooling off, and second is some of this also leads to sentiment and confidence in the market. When you talk to people, you get the sense that things are getting better?
I think people expected the chain of expectation was people expected liquidity to cause asset quality, and obviously the original fear was asset quality. I think in general, the housing finance companies had a business model, a concern where they were borrowing at the shorter end and lending at the longer end. And that concern was independent of this liquidity crunch that happened in the market. So I think what is expected is some of these housing finance companies would slowly start improving their asset liability management practices, where the borrowing at the shorter end will go up. And obviously, as bonds have also kind of become more expensive, you will also see the banks being more competitive in the process. So I think what we are seeing is the liquidity crisis has not caused the asset quality as people were expecting. I think asset quality overall, the real estate sector has been consolidating because the inventory sales have been pretty weak, and that is a function of the price, and that's also a function of the mortgage rate, because given the rates have kind of have been increasing, the mortgages are not getting any cheaper. So for overall concerns to come down completely, you would want the inventory sales to start moving. You would want the mortgage rates to kind of start becoming more reasonable for demand to inflect, and for the real estate and the mortgage sector to kind of start rolling again. But I think what we are seeing is a slow and gradual consolidation and kind of more slightly painful consolidation of the real estate sector, but not clearly any kind of asset quality accidents as market had expected. So those concerns have clearly abated in the recent cycle.
Two follow-up questions there, Gautam, on the asset quality concerns. It may be a little early in the cycle, right? Because if the concern, for instance, was on the LAP portfolio, people were wondering whether, you will continue to get funding for those kind of borrowers, and if not, what happens, maybe 3-6 months down the line. So I don't know if it's if we can sort of call the asset quality concerns off the table. And the second question is, what happens to growth from here on for these NBFCs? Do you have a fix on that?
Sorry, I didn't catch your second question.
Okay, I'll get to the second question in a bit. The first question first.
Yeah, so I think the asset quality, I think on the LAP, I think LAP has been a concern for the last 18 months. Actually, some of the quality NBFCs have actually been going slow on the LAP segment for a while. In fact, some of the banks have also slowed down. So I think LAP is a known risk. I think the big difference in expectation that happened this time is that I think the risks were known. I think people knew that the wholesale side, or the developer side is consolidating, and one has to be a bit careful there. The bad apples were known there. The LAP segment has been known to be kind of weak on collections for the last 12 to 18 months, and some of the smart lenders have stopped lending there. So I think what has happened in the market is it was a good warning. Everyone knew of the risk, and especially if you know the risk, then you kind of manage them better. So I think people have kind of turned cautious over a period of time. So my sense is it's a bit early to call that the asset quality episode may or may not happen. But I think given the risks are known, people know there's been a liquidity issue, people know the specific pockets of risk. I think lenders have just turned broadly cautious, and they're consolidating the liquidity and managing it better. So hence, I feel that we'll potentially see this crisis off in the next few months.
Okay, Gautam, my second question was actually on growth rates, sort of growth rates for these NBFCs broadly, not just HFCs. Yeah. Do you have a fix on where they will settle, how much lower than they'll be compared to earlier? Because I guess that would then determine multiples, etc., that investors are willing to give for some of these companies.
Yeah, so I think the ones which will see the cost of funding going up, and in that case, clearly, if you pass that on at the mortgage for the mortgage products, then clearly the demand will slow down. So HFC is clearly one pocket, but otherwise, if you look at sort of consumer lenders, you look at vehicle finance lenders, particularly the commercial vehicle finance lenders, the demand side has been pretty strong. So I think if for a quarter or two these NBFCs see off the liquidity crunch or see off the kind of tight liquidity, you may see the growth to be sort of temporarily slowing down for some of the players, to the extent of if somebody is growing at 30%, I think they would potentially grow at 30% lower, close to 20%. But I think for the quality NBFCs, I don't see even the growth slowing down, to be honest. I think the narrative that some of the NBFCs would not be able to raise money has actually proved to be untrue in this period, I feel. Hence, the quality NBFCs, I don't think we will see a big growth slowdown. For some of the ones which are smaller, which lack parentage or which lack the vintage, the funding side may be a bit slower, so they may take a rest for about a quarter or two. But I think starting next year again, we'll see the growth coming back. So I see the growth challenge as more temporary, to be honest.
All right, Gautam, great to speak to you. Thanks so much for stopping by to share your views on the NBFC episode.